Hello, my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. As is usual at this time of year, I have forgone the usual daily charts and instead I have concentrated on giving a longer term view using weekly, monthly, even yearly charts, but rarely using daily charts. Now, if you would like to discuss any of these charts, I'd only be too happy to take your call. So without any further delay, let me introduce today's longer term chart. Today I'll be looking long term at Paris RAPESEED. I'm not happy about some of the patterns I've used here on this monthly chart, but it's not about me being happy, but of utilizing what works and letting go of what doesn't. Anyway, until 2020, the market had utilized one major pattern to show the overall mildly bullish direction of the market since about 2009. It was the 2009-2014 bullish shift pitchfork. Primarily, the market used the lower tine, currently at 3.825, which was synonymous with the uptrend from that period, as the bullish angle of attack. There was one breach below back in March 2020, but there were no closes below it. So I'm treating that breach lower as somewhat of an aberration. Now, even though the market has broken up and out of this bullish shift pitchfork, prices continue to still use the upper tine, currently at 624.5, as a support base for the further move up, as recently as in October to November and December 2021, which is why I've still left what ostensibly looks like a broken pattern. I've still left that pattern on the long-term chart. Going back in time a bit, since March 2019, the market started to form a more acute bull channel, currently 451 even to 542.5. However, to me, there had been issues with this bull channel, as it did not look so much as a bull channel and more like a nascent diamond pattern. But anyway, the market broke higher up and out of this bull channel back in April last year. Interestingly, this happened at the same time as the crossover of the upper bull channel line and the middle tine, currently at 502.25, of the same shallowly bullish shift pitchfork. We then had some hesitation in the market, no doubt prompted by the previous highs seen back in July to September 2012. It's interesting to note that though we had monthly indecisive spinning tops at this time, the highs made by these indecisive patterns were fresh and higher that had been seen previously. This indecision eventually led to a bullish halfway hesitation pattern. Actually, it led to two bullish halfway hesitation patterns over this time. One originating from February last year and another from March 2020. Now this led to targets X and X1 in the 627.5 and 667.75 areas, respectively. Before I go into what happened in 2021 and now may happen in 2022, I should like to point out the elephant in the room. 2020 was a rare annual key reversal up. And though I have pointed out patterns on how the market advanced higher, this annual key reversal up is, to me, without doubt, the singular event that has been the cause and origin of the big technical moves up we have seen since. Anyway, target X was achieved in September last year, just as the market broke up and out for the first time of the bullish shift pitchfork. In December 2021, the market made a huge, really huge monthly key reversal up at what was then the top of the market, and in the process reached target X2. Oh, sorry, X1, I should say. This big move up happened as the market had yet again hesitated between October and December last year. On the longer term chart, this doesn't show so well, but it is there. Thus, this has led to yet another target topside, target X2, and that is in the 834.5 area. Now, I know this is a big ask, but I can only put down what I see. This leads me to my final 2 points. Since May last year, we have formed a newer, much more acute bull channel. Currently 634 to 772. To me, it is super acute and thus unsustainable. But it is there, and I will not dismiss it just because of acuteness. Additionally, and this is the bit I do not like, I have kept on, possibly only for this month, the thoroughly broken original 2009 to 2014 Bullish Andrews pitchfork. I actually can't believe I'm saying this. Well, this pitchfork worked, sort of, till about the end of 2016 when prices broke down through the base of the support of the lower time. It's currently at 606 3/4. Since then, this pattern has not been valid, pointless even, until this month when the market's peak had surprisingly been right on the middle time, and it's now starting to break through it. The middle times are currently at 760. This surprise is, as you can imagine, a possible earthquake. Because if this middle time does cap the market, and we've yet to see it from a closing market basis for the month, then it would mean a huge, huge change in market dynamics. You see, if it does, then what I've put forward as the origin of the move higher, namely the 2020 annual key reversal up, may not be the origin, or at the very least it may be the most recent impetus or description of what originally started back in 2009 to 2014. And that is a big, big thing. Astonishing even.